Good morning. Thanks for joining us, you guys. I'm
Hey,
Liz
Liz.
Croft.
Yes.
Good powwow as always. Looking forward to it. I'm Liz Croft with Soul Property Advisors, and I've got my business partner Lance Hulsey here as well, and rockstar Jim Black with AllCal Financial, and we'll be talking about kind of what's going on in the market as far as rates and financing and how to help buyers get a leg up in this crazy seller's market out there. So Lance, I'll hand it over to you and take it away.
Thanks, Liz, and good morning, everybody. Good morning, Jim. It's good to see you again.
Absolutely. Good to see you guys. Unfortunately, we're not together right now, but hopefully soon.
Hey, you know, we got to do that distancing still until it's all good. But I want to kick off the conversation because this market's crazy, and I just want to throw it right in your lap. The big question that everybody's asking, and that's what's going on in this market.
Sure. Be happy to talk about some strategies that we're seeing work for our clients and great agents like your guys' team. Right now, we're seeing obviously inventory constraints, right? There's a very big shortage of inventory, which creates a lot of emotional activity in terms of people paying a lot more for things and probably removing a lot of the contingencies that they would normally have in an escrow. Mm-hmm. So normally you'd have a loan and appraisal contingency along with your inspections, but unfortunately right now, a lot of those are being waived either because the sellers already have the reports and inspections, or the market's so hot that there's not a need to have those for the price of the home to get the highest they can get for top dollar. So what we're doing right now is we're providing two really good solutions that has worked 4 of the last 5 offers that have been sent out there. Those two solutions, one is a bridge loan, which is basically a cross-collateralized loan. That's for people that are moving from a house that they own now to another property. So that's the buy before you sell mindset. Right. We're able to close in 15 days with no appraisals, no real contingencies, and allow a client to compete with an all-cash offer. So that is a move-up strategy or move-down strategy. We're seeing a lot of influence of buyers still coming from over the hill, from the San Jose, San Francisco, East Bay markets. Mm-hmm. So that's a really nice tool that we've seen work for a lot of transactions recently. So that works well for, you know, people who own a home. Well, for first-time home buyers or people that haven't bought a home in the last 5 years, there's another tool that I love to use, which is basically letting people know they don't need to put down 20%. They don't need to put down 20% to avoid mortgage insurance. It's a big myth out there. And we're able to go to 10% down up to $2 million of a purchase price. Well, Jim, that's great. Putting less down is all good, but what's the real benefit for me as a client? Well, if you really find a property you want to buy and you are waiving your appraisal contingency, there are ways for us to get more creative to allow you to buy the home still. For example, let's say I had 20% down right now on a property and I was going to write an offer with no appraisal contingency. Well, if that appraisal comes back in lower than the purchase price, I need to be able to bring more money in to close a transaction. So all we simply do is give the borrower a larger loan amount to give them that flexibility, to let them know that if this is the house of their dreams, if they want this house at any costs, that's a way that we can do that for them. Also keeping in mind their long-term goals, right? So in a short-term play, people probably aren't going to be paying up for a property to try to sell it quickly. So that's a really good long-term plan for people that are buying owner-occupied properties and they're thinking 10 years down the road or a long-term horizon.
That's awesome. I think those are really great answers, and people should really, you know, reach out to you and consult on those strategies in coordination with their real estate agent as well. Let's talk about rates real quick, because there's been some tick up in rates a little bit, and I'm just, you know, I get a lot of questions about purchasing power versus rate increases. Why don't you talk about that a little bit and what you see is going on right now in the market?
Absolutely. A very simple rule of thumb is when interest rates move by 1% higher or lower, a buyer loses about 11.5 to 12% of purchasing power. So if rates go higher by 1% and I was looking at $1 million, now I'm looking at $880,000, just to put it in perspective.
Right.
So that affects both buyers and sellers, right? If the buyer's capacity goes lower for what they can afford, sellers are going to have a hard time getting the higher price if people have a loan. So right now with rates, what we've seen in the last about 45 days, we've seen a steady increase in rates, down from as low as 2.625 up to about 3%.
Okay.
What we always do is we always look at two solutions for each client. And we do what's called a break-even analysis. Paying points sometimes is not a bad thing.
Right.
Sometimes it's a waste of money. So we evaluate that by looking at what is the cost to get that rate and how long does it take to get that savings difference back. So right now, 3% is probably a standard rate that I would look for any loan sizes up to about $2 million.
Okay. And then the last big question that often comes up is around the idea of down payments and how they can put that bundle of down payment together. So, you know, sometimes there's gift money versus their own money. Sometimes it's, you know, money they have in, say, a brokerage like a Schwab or an E-Trade. Can you talk about that a little bit so that they kind of understand how they can put that bundle of down payment together?
Absolutely. We're closing one this next week here where a borrower got 2 gift letters from both their parents, and they got funds from their 401k. So there are really 3 ways to source money, in my opinion. One is your own reserves or assets, checking, savings, CDs. The other one is through a gift from family members, is the most common way. There is no limit on our side with the gift funds. Someone could gift somebody $1 million to buy a home. We aren't the IRS, we're not tax advisors, so talk to your CPA.
Right.
And the last way is to borrow against your retirement accounts. Again, I'm not in the CPA realm, but there are some advantages there if you have a 401k to talk to your plan provider to see what the benefits are. Most of the benefits are up to $50,000 or 50% of the value of the asset, whichever number is lower. So that's sometimes a good helpful tool to use, and then you pay yourself back interest on that 401k loan that you have. So those are some of the strategies that we look at. Again, we're going to optimize the solution for the specific needs of the client.
Right. And you mentioned earlier that you could start at a 10% down and move them into a different down payment structure depending on, you know, the loan package and the property. So I think that gives people a lot of options. I think that, you know, from what you've said today, that, you know, working with their agent and their lender, they should be able to get all the answers they need. I agree with you 100% that you should reach out to your CPA if you start dealing with anything that might have tax implications. As agents, we're not tax advisors, and as lenders, you're not tax advisors. So, you know, that's a third person in this kind of process that'll help you advise. Anything else that you want to share of what's going on in the market right now?
Absolutely. I would also recommend when you get qualified for a home loan that you work with a local lender that knows the marketplace. And I say that because sometimes the reputation of the local team you're working with, the real estate team, the lender, everyone involved can help make the seller understand that we're all working together, we're all united, versus working with some online company or some agent that isn't expert in the marketplace.
Right.
I got one in escrow this morning. It had 28 offers in Danville, 28 offers.
Yeah.
We weren't the highest offered, but the agent and the seller knew myself and the buyer's agent. So that played a little bit of a role that they know we weren't going to let them down. And it's an honor to be involved with the communities that we serve, right? So a lot of times people they take that for granted. And I think that's one thing that's really important is to work with your local professionals. You guys have a lot of properties in SLV and mountain areas. Well, guess what? When I'm looking online at a photo, it might be the 1 minute that place gets sunlight during the day, or it might be a bad photo because it doesn't show that the property gets sunlight all the time, or that it's near a creek or near a flood zone or whatever it might be. So again, just working with local professionals that live and love where they work and choose to call their home. And I appreciate you guys for what you do for your clients, and I'm always honored to get to work with you guys on transactions, because normally it's a win-win for everybody.
Well, this is all awesome information, and I appreciate working with you as well. And I do agree that you don't hire an agent in another part of the state to try to help you buy something, you know, unless they know that area and they work that area. And the same with lenders. You know, I think it's really helps the client to have somebody that understands the local markets that they're lending in. Tell us how we can get people to get in touch with you. Sure.
The best way is you can send me an email, jim@allcalfinancial.com. You can also text me anytime at 925-285-4898. And again, we have a team around us. It takes a team, just like you guys have a team. I'm fortunate to have a strong team behind me. We get to do the fun work. A lot of times people think, and people behind the scenes don't get enough credit. So I know you have a great team behind you. So thank you to all those team members for what you do, and for my team, what they do. It means a lot.
Well, thank you, Jim and Liz. I'll throw it back to you.